Welcome to another FAR walkthrough video. I'm Logan, and in today's video we're going to be going over preparing the statement of activities, and we're going to be doing that the SuperfastCPA CPA way, which is diving straight into questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and check out our free 1-hour webinar training. We go over the key ingredients to passing the CPA exam, and again, it's only 1 hour, it's free, and we will teach you how to pass the CPA exam effectively and efficiently. The link will be in the description, so make sure you go check that out. Also, just letting you know, we will only be going over 5 questions in this video, whereas Superfast CPA members will have access to the full 10-question video when we post it in the members forum. So if you like this, you can get more of it by becoming a Superfast CPA member. With all that said, let's dive straight into the questions. Alright, here we are at question 1. The Harmony Arts Foundation, a non-governmental not-for-profit entity, is preparing its statement of activities for the year end. The following information is available. The foundation calculated an unadjusted decrease in net assets without donor restrictions before considering other transactions. So they already calculated this $50,000 decrease. Donation of $40,000 received to fund a new community arts program. Donation of $25,000 received to be used for scholarships. Donation of $75,000 received for general operating expenses. Assets of $60,000 were released from donor restrictions during the year, and expenses related to general operations were $30,000. What is the total increase or decrease in net assets without donor restrictions that the Harmony Arts Foundation should report in its statement of activities for the year? Okay, if you remember in the previous video, we talked about the purpose of the statement of activities, and basically it's an income statement for a non-governmental not-for-profit entity. We already talked about the statement of financial position, which is the balance sheet. So now we're going to be talking about the things that basically the revenue and the expenses for the company, and how these different donations and expenses are recorded on the statement of activities. So if you remember, the idea behind the statement of activities is to basically calculate the change in net assets with donor restrictions and the change in net assets without donor restrictions. Like, that's the general idea. So with all this information, and if you've watched the previous video, you probably can figure out what that is. If not, though, that's okay. We're going to dive straight into the answer to kind of get an idea of how the statement of activities works and flows. Alright, and the answer is B. There's a $55,000 increase. So let's walk through this. So to calculate the total increase or decrease in net assets without donor restrictions, you have to start with that beginning unadjusted decrease that they had already calculated of $50,000. Then you have to add the donation received for general operating expenses, because that's just general expenses. They can use it for whatever they want. That doesn't really have a restriction. So that's a $75,000 increase there. Then you add the assets released from donor restrictions of $60,000, because remember, sometimes things can be moved from with donor restrictions, whether something was completed or the donor just didn't want to restrict it anymore. That can be moved from with donor restrictions to without donor restrictions, and that would therefore increase the without donor restrictions net assets. And then you subtract the expenses related to general operations. And again, the statement of activities is basically an income statement, so expenses are recorded here. So overall, you have a net increase where you take this negative $50,000 plus $75,000 plus $60,000 less $30,000, giving you a $55,000 increase in net assets without donor restrictions. Now, one thing I want to point out, the $40,000 donation for the new community arts program and the $25,000 donation for scholarships would be considered increases in net assets with donor restrictions. And it's pretty simple. With donor restrictions, it's been restricted by the donor for a specific purpose. Without donor restrictions, it can be used for anything that the entity wants to use it for. Now, that was just the first question where we got a little bit of a taste of how things can flow in the statement of activities. Let's go to the next question to learn a little bit more. All right, here we are at question 2. The Oak Ridge Education Fund, a non-governmental not-for-profit entity, is preparing its statement of activities for the year. The following information is provided regarding its expenses. So we're dealing with expenses specifically here. Educational programs of $150,000, fundraising event of $30,000. They had office rent, and half of that was for program, and half of that was for support, and we're going to talk about that here in a second, of $20,000. Utilities, again, half for program, half for support, of $5,000. Program materials, $50,000. Marketing and advertising, $10,000. And there was an executive director's salary of $120,000. Now, it does break out the executive director's salary a bit here. They spend half of their time on management and general activities. The other half of their time is split evenly between program-related activities and fundraising activities. So if you think about that, 50% of their time is on management and general, 25% of their time is on program-related, and 25% is on fundraising activities. Now, how much of the total expenses that we just went over should be classified as support expenses, and how much of that amount should be classified as management and general expenses? Okay, there's a lot to this question. There's a ton of expenses here, and we're just barely hearing that there's support expenses and that the support expenses can maybe be broken up into management and general. So there's a lot here. If you don't know how to do this, that's okay. We're going to dive straight into the answer to learn more about how the expenses are broken up in a statement of activities. All right, here we are at the answer. The answer is A. The support expenses had a total of $142,500, and out of that $142,500 of support expenses, $72,500 of them were management and general expenses. Now, there's a lot to learn in this question, so let's walk through it. Support activities in a non-governmental not-for-profit entity refer to expenses that are not directly tied to the organization's primary mission or programs, but are necessary for the organization to operate effectively. These activities ensure the organization can carry out its mission, but do not include the direct costs associated with delivering services or programs to beneficiaries. So again, these are the activities that are not directly related to program, they're just there to make sure the company runs. Support activities include three main categories: management and general expenses, which cover administrative costs like executive salaries and office expenses; fundraising expenses that are related to generating contributions. They're trying to get people to give them money, such as campaign costs and fundraising staff salaries; and membership development expenses, which involve recruiting and retaining members through activities like member communications and benefits. So those are the three typical categories that the support services are broken up into: management and general, fundraising, and membership development. Typically, a lot of the time, it's fundraising and management and general, by the way. Like, those are the big ones. So with that information, we can figure out how much is support expenses. So there's fundraising. That's one of the categories. Marketing and advertising, I would think that typically is considered fundraising because, again, you're marketing yourself. You are trying to get out there to make sure people know you're there so that you can get money. Office rent, half of it was for support, so that's $10,000. Remember, the original was $20,000. Utilities, same thing. $2,500 is half, and so that goes to support. The other half would be for program because the total was $5,000. And then the executive director's salary. Half of it goes to management and general, so that's $60,000 because that's $120,000 multiplied by 50%. And then 25% of that goes to fundraising. So a total of $90,000 of the salary for the executive officer goes to support. So let's scroll down a little bit here to get a more full picture. So we add that all together: the fundraising expenses, the marketing and advertising, the office rent, the utilities, and then the executive director's salary for fundraising and for management in general, and that gives you $142,500 of support expenses. Now, out of the support expenses, let's go back through and look at the management in general. There's the executive director's salary. Again, that was given to us, $60,000. The office rent, this is something that would go to management and general because if you think about it, it's like the office expenses. It's just something general that you have to run the company. And then utilities, same thing. It's just a typical office expense. And so it's support, but it's going to probably go in management and general unless they specifically say otherwise. But most of the time, utilities and office rent would go towards that. So you add those together, and that gives you $72,500 of management and general expenses out of the supporting services. So again, pretty big question here. But the main thing I wanted you to learn was that there's program services and support services, and typically support services are also broken up into another three categories, which is management and general, fundraising, and membership development. So something you'll be learning as you study this kind of stuff is what typically goes into those. And we went over a whole bunch of it here, so I hope that helped. Let's go to the next question. All right, here we are at question 3. The Bright Futures Foundation, a non-governmental not-for-profit entity, incurred the following expenses during the year. They had salaries for program staff, office supplies, rent for administrative offices, fundraising events, and utilities for program facilities. So they had all those expenses. How much will the net assets without donor restrictions decrease as a result of these expenses? Now, this isn't something we've gone over yet. So what do you think? Do you think any of these will affect without donor restrictions? Will all of them? Will only some of them? If you don't know, that's okay. Again, we're going to dive straight into the answer to learn how to do this. All right, here we are at the answer. The answer is D. $115,000 is how much the net assets without donor restrictions will decrease. So let's read through this. All expenses besides investment expenses decrease net assets without donor restrictions. So that's a pretty easy rule to remember. All expenses in a not-for-profit entity besides investment expenses reduce net assets without donor restrictions. So it's pretty simple. You just add it all up and all of these together is $115,000. That's how much it will decrease by. Now, investment expenses are the expenses that relate directly to an investment, and those are typically netted against the investment income. Now, that's not something you'll deal with super heavily, most likely, but just so you know, investment expenses are not something that will for sure decrease the net assets without donor restrictions. They might flow to that eventually, but it's not guaranteed, whereas all other expenses will decrease without donor restriction net assets. That's an easy rule to remember, I think, so let's go to the next question. All right, here we are at question 4. The Lakeside Community Health Center, a non-governmental not-for-profit entity, received various donated services during the year. To record the fair value of these services, certain criteria must be met according to generally accepted accounting principles. Which of the following is not a requirement for an organization to record donated services at their fair value? So sometimes organizations will receive services as a donation. People will help them out, and so instead of the organization having to pay for that, they have somebody come and help them. Now, 3 of these are requirements for it to be recorded at its fair value in the financial statements, but 1 of them is not. If you don't know the answer, that's okay. If you want to think about it for a second, that's all right too. Come back when you're ready and we'll look at it together. All right, the answer is B. The services are performed by volunteers without any special skills. That's not one of the requirements. So let's just simply go over the requirements here. For donated services to be recorded at fair value, they must meet specific criteria. The services create or improve non-financial assets. So basically, they are not necessarily making money for you. They're just doing something for you, like building a building, preparing a statement for you, or different things like that. They're not making you money, but they are helping you out, and that's what it means by non-financial assets. The services require specialized skills that are provided by individuals who possess those skills, and the organization would otherwise need to purchase the services if not donated. And then finally, the monetary amount of the service can be measured and calculated. So, you need to be able to calculate how much the service was actually worth. So that's easy to understand. And then, basically, they have to help you with non-financial assets, and it has to be something that the organization would have had to pay for if somebody hadn't donated it to them, and it would have required special skills. And that's a big thing right there, because of course you could have a whole bunch of volunteers that don't have any special skills. They just help you with manual labor. It has to have some kind of specialized thing that somebody needs help with, like a CPA preparing the tax return, or an architect building this or that. Those are the kind of things that would count for donated services being recorded at their fair value. All right, let's go to the next question. All right, here we are at question 5. The Heritage Cultural Foundation, a non-governmental not-for-profit entity, is preparing its statement of activities for the year. The following events occurred during the year. They had a permanent endowment of $200,000 that was received for long-term investment to support the foundation's activities. The endowment earned $10,000 in investment income, which, per the donor's request, must be used to fund a specific cultural preservation program. The investment incurred a loss of $250,000 during the year due to poor market performance, so they lost a ton of money because of it. The foundation received an additional donation of $50,000 to be used for a community outreach program. The foundation incurred $30,000 in expenses that met the restrictions of the community outreach project donation, so that is directly related to the thing above it, where they were given that $50,000. The foundation released $20,000 from donor restrictions for expenses incurred in a previous period related to another program. So a lot of stuff is happening here. What is the net increase or decrease in net assets with donor restrictions that the Heritage Cultural Foundation should report in its statement of activities for the year? Okay, we've gone over a whole bunch of things in this video, and I think that a lot of this you could figure it out as you're reading through it. Give it your best shot. There might be a part of this that you miss or that you don't fully understand, but that's okay. Again, give it your best shot, get as far as you can, and when you're ready, come back. We'll look at the answer together. All right, the answer is C, a $40,000 decrease. And there's a lot to go through here, so let's dive straight in. To calculate the net increase or decrease in net assets with donor restrictions, we have to look at all the things that would affect that. So there's the permanent endowment received. That's obviously with donor restriction. And again, a lot of this you will have learned from the previous videos where I've been talking about not-for-profit entities. So if you haven't watched those, it might be a little bit more difficult to know what net assets with donor and what net assets without donor restrictions are. So I'm kind of assuming that you've seen those other things. But again, let's dive into this. The permanent endowment, that's net assets with donor restrictions. Investment income earned, there is a restriction on that, so that also increases net assets with donor restrictions. The investment loss, they lost $250,000. That all goes straight to net assets with donor restrictions because it's related to that investment. Expenses meeting donor restrictions for community outreach project, that was $30,000 of expenses, and that indirectly decreases the net assets with donor restrictions, and we'll talk about that in a second. And then the assets released from donor restrictions, they move it from with donor restrictions to without donor restrictions, so that also decreases it. So overall, you take the endowment, you add the investment income, you subtract that investment loss, you add the donation for the community outreach program, you subtract the expenses, and again, this is in a roundabout way. We're going to talk about that in a second. And then you subtract the $20,000 released from restriction. So overall, you have a net decrease in net assets with donor restrictions of $40,000. Now, one thing I want to point out here that might be a little confusing. When there are expenses related directly to the restriction of a donation, so these ones up here, these $30,000 directly related to the community outreach project, these expenses don't directly reduce the net assets with donor restrictions, because remember, all expenses besides investment expenses are considered expenses without donor restriction. However, if the expenses meet the restriction of a specific donation, money is moved out of net assets with donor restrictions to net assets without donor restrictions to cover the expense. So in a roundabout way, the net assets with donor restrictions are reduced. Now let's just say that one more time. In a roundabout way, these expenses do reduce the net assets with donor restrictions, and here's why. All expenses besides investment expenses are expenses without donor restriction. So they're not going to directly decrease the net assets with donor restriction. However, when it meets that specific restriction, then money is moved from net assets with donor restrictions to specifically cover the expense. So it kind of nets out by doing that, but you are reducing the net assets with donor restriction in a roundabout way through these expenses. But remember, they don't directly do it because it is going to show up in two different places on the statement of activities. It's going to show up as an expense without donor restriction, and it's going to show up as net assets released from donor restriction. So it's going to show up in those two areas because they're moving some things around to cover the expense. So the rest of this, I think, is pretty straightforward. You know, the endowment and the investment income, those had restrictions. The investment loss was related to the endowment, so that's with restriction. The community outreach donation, that was specifically related to that. And then the $20,000 was released from restriction, so again, that's pretty straightforward. But the thing that was probably the most confusing was that $30,000 of expenses directly related to the community outreach program, and that's how that works. And with that, we've learned a lot in just 5 questions. I know we've talked about a whole bunch of different things. Before we go any further, let's do one more part of the process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions, you will notice the things that keep popping up. These are the things that your review course is obviously trying to tell you and trying to teach you because you've seen 4 questions on it. You've seen 4 questions on how to calculate program expenses, or you've seen 3 questions trying to teach you how to calculate the net decrease in net assets without donor restrictions, or different things like that. These are the things that keep popping up so that you know they're important, so you write them down as pillar topics, kind of to summarize the key points or the pillar topics of what you just went through. So let's go ahead and look at those for this video. All right, here are the pillar topics for this video, and they're pretty straightforward. All expenses except for investment expenses decrease net assets without donor restrictions, and reclassification occurs when donor restrictions are met. Donations received with specific donor restrictions increase net assets with donor restrictions, and releases from restrictions decrease these net assets. So that's pretty straightforward right there. When you receive a donation that has a restriction, it goes into net assets with donor restrictions, and then if the donor releases it, then you can release it. Only donated services that require specialized skills and would otherwise need to be purchased by the organization can be recorded at fair value. And again, just one more reminder, it also needs to be measurable. You need to be able to actually say, this is exactly how much it would have cost, or exactly how much it costs at fair value, to be able to record it like that. And then finally, program expenses are the expenses directly related to supporting the organization's mission, while support expenses include management and general, membership development, and fundraising costs that are necessary for operations but do not directly fulfill the mission. So again, there's a lot to the statement of activities, but the main idea is that you're trying to figure out what the change in net assets with donor restrictions and what the change in net assets without donor restrictions is throughout the year, and that's going to flow to the statement of financial position. But you're doing this by looking at the revenues that affect the assets with donor or without donor restrictions, and then you're also breaking up the expenses into multiple categories so that you can know how the money is being used. And with that, those are the pillar topics, and that is the end of the video. Before you go, make sure you check out our free 1-hour webinar training on SuperfastCPA.com. Again, the link will be in the description, and we will show you how to pass the CPA exam and how to study for the CPA exam efficiently and effectively. Also, just a reminder, we only went over 5 questions in this video, whereas Superfast CPA members will have access to the full 10-question video. So if you liked doing this with me, you can get more of it by becoming a Superfast CPA member. If you liked the video, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.